Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today is Thursday, May 8th, 2008. As we get into today's video, we're going to take a look at the turn date that InTheMoneyStocks.com had called for May 2nd through May 5th and 6th, which was last Friday, Monday, Tuesday, and how the turn date represented a change in polarity or a topping out pattern in the markets. And then we're going to also take a look at yesterday's move, which was a drastic drop, and also today's pause day. And those of you that have been with us for a while know that after a large move down or up, oftentimes you get a day where the markets are flat to slightly the opposite direction of where they were the day before, and that's exactly what we saw in the markets today. The Dow was up about 52 points, the Nasdaq was up about 12.5, and the S&P was up about 5 across the board. So a small pause day in the markets, a slight up move in the markets after a mega down day yesterday. And we're going to have to look at these charts now over the next couple days to really figure out how much lower this market's going to go. Because InTheMoneyStocks.com does think the market will see a bigger drop than what we've seen so far, and we'll see if we are right on that call. So as we get into the intraday chart, we're going to focus in on the moves today on the intraday, which was nothing spectacular, to be frank. We're going to take a look here. It was a little choppy, but overall we basically saw a light volume market. And the volume compared to yesterday was very, very light. On the ES, we did about 1.7 million contracts or so, and compared to yesterday where we did 2 million contracts. So again, a very light day. And that signaled again a pause in the markets as kind of people took a breather from the selling that happened yesterday. Now, in our estimation, we should resume that selling very soon. It may not be tomorrow, it may be tomorrow, but it should be coming over the next couple days, and we will follow the markets very closely to see if we can see any inkling of how that's going to develop. All right. Now, looking at the intraday chart, and this is what you guys are seeing before you, you can see it's the Intra Day E-Mini chart, which basically tracks the S&P pretty well, and we like to use it because the moves are more exaggerated in the E-Mini chart. And we look at the 10-minute intraday chart for this analysis, and you can see here early on how the markets are trending up, and then basically you get the market to come into the open here. Here's 8:30. You get a little economic news, nothing major, but it started to drop the markets. And you sold off for a while. You got a nice little tail on the bottom, which often is a buying opportunity. Sure enough, it sent the markets up right into the 50 moving average. You had a pullback, and we basically hovered around the 20 moving average. Then right around 1 o'clock, you got a little buy program to step up. Volume was very, very light on this buy program, but nonetheless, it sent the markets up to the 200 moving average, at which point you had major resistance right at this line, and the markets began to sell, and you had a little bounce and a fall again into the close. Now, interestingly enough, we had some AIG news after the bell, just as the futures were about to close. So these candles actually reflect a move down off that AIG news, in which case I think from what I read, and it's just a brief reading, so I'm not exactly sure, but it was something about raising capital. You basically saw a nice move down here. Now, one pattern I do want to show you guys here, and I would hope at this stage of the game most of you guys can pick these patterns out from the charts as they come up even before I point them out. But we did see a little bit of a head and shoulder pattern here in the markets on the intraday 10-minute. And it's a great pattern to note, okay? So here you have a shoulder, your left shoulder, you have your head, and sure enough, there's your right shoulder. Beautiful head and shoulder pattern, and it looked like it was just about to break down and then the market closed. So we'll see if that continues tomorrow with some selling. Very possible you will see that continue tomorrow with some extra selling action. All right. Now what we're going to do is look at the daily chart here and get a little bit of a picture of where the daily chart is heading. And to do that, we're going to look at the SPY. So here's the volume, and again, I want to stress this, guys. Is volume ever since this up move started has been very, very light, and that's one of the reasons we have been cautioning on this market over the last few days. And sure enough, we saw that fall yesterday. But you can see the flat volume on the light side as compared to this over here and so forth. And look at the size of this move up. All right. So you have a drastic move up. We had the topping pattern out right here on our turn date, which signaled the topping out pattern, and then the drop yesterday. And the SPY actually ended the day to the negative side, and I think it kind of got a little bit of extra selling pressure as they closed it lower on that final bar intraday. But nonetheless, either way you cut it, even though the overall indexes were positive, the SPY was negative, it's all right around that pause day where it's flat on the day. So here we have the pause day, and now we're going to come into this support line at the 20 should we dip a little lower tomorrow. And that's where we're going to start to watch, because this is going to be, to me, this is going to be a key area. You can see right here, if you draw a trend line underneath these lows, this is a line which coincides pretty much with this 20 moving average we need to watch. If this line breaks, meaning the 20 moving average breaks, you could see a nice little dip in this market, possibly to the next support line, as low as, let's see, possibly in this range right to here, which would be right above the 50 moving average, or about on the 50 moving average right here. All right, and again, you can just take a look here and draw the trend line in, and this almost coincides with that same point. Notice how you take the low here, the low there, and all the way up, and it coincides where the market's resting right now, or just below it. So there's good support right in this range here on the SPY, but again, at some point we do feel this is going to break, and once it breaks, you're going to see probably a dump out in this range of this line drawn in, or right below it to that 50 moving average. Alright, now again, we want to see if more volume comes in on the downside. That'll be more significant, and that'll mean more. Alright, on the upside, you still have resistance right at the high, so nothing's changed on the upside. The high of the day on Friday, which was last Friday when we gapped up and sold off, and that was another great signal on our turn date, right around here, which coincides now with the 200 moving average, is still your upside resistance. So you always want to look at the upside. Even though we're favoring the downside, you have to be prepared for anything. Okay? So again, your upside resistance right here coinciding with the 200. And again, we're going to look to see if this line breaks here. Should we close somewhere in this range tomorrow, well then you know the down move has 100% started, even though we do already believe it did with yesterday's move. Alright? Also a side note here, folks, and I just in looking at the chart here, you have the daily here of the SPY. Notice the slight negative divergence here. You can see right here is you have a higher move in the markets, and you have the stochastics here diverging to at least flat, if not a little lower, and the market's moving up. So that's called a negative divergence, when you have a higher point here on a lower point on the chart, and a lower point on the stochastics, but a higher point on the chart price-wise. And again, that can be a negative signal as well that we are seeing, or one of the many ones that we've come up with. Alright, let's take a look at the NASDAQ now. Just the NASDAQ on the daily. The chart basically resembles the SPY. Again, it's a little further away from the 20 moving average, as the technology sector's been a lot stronger, and I want to preempt that. You saw the NASDAQ here up about 12.5 to 13 points today. In addition, you also saw Google up about $4 today. Apple was up a couple bucks. Baidu was down about 4, but Research in Motion was up as well. We have been noticing that Apple is very, very extended up here, and we're going to see if this top now holds. All right, this is going to be resistance right up here, the high of yesterday's candle. That was an ugly reversal yesterday on Apple, and we're going to see if this resistance holds true. At some point, this Apple needs to fall to this 20 moving average. Now, the break point obviously is a break of the high, but as long as it stays below, has a good chance of falling down, probably to this area, should the markets really tank over the next couple weeks. Now let's touch on oil quickly, because oil and the USO, unbelievable. We had the small correction about a week ago, and since then, the USO has spiked insane amounts here. Alright, just an overall mega move up, breaching the 100 mark today. And we love when it pushes through an even number like that, because oftentimes that's the extension and the end of the move. So we're watching the USO extremely carefully. It's on high alert, on red alert, whatever you want to say. We're inching towards looking for a shorting opportunity, or going on that side of the trade, or thinking it falls. Alright, so again, we're just on the borderline of that, but it looks better and better here as this extension move is overdone, and then the commodity itself needs to pull in. Alright, so we'll kind of keep you posted on that once we do it, and we'll let you guys know. Alright, and as always, as I always say, these keep in mind, folks, that this is just for entertainment purposes. Please don't construe anything I say as investment advice. Always consult your financial advisor before making any investment decisions. Alright, taking a look at a few other things here. Let's take a look at the GLD as long as we have a couple minutes left. Look at the sell-off so far in the GLD. And now the GLD was up nicely, but one thing I do want to draw here on the GLD, check this out, folks. You draw it from the top to this top, and where are we coming into? So this is going to be mega resistance on GLD. Notice how it's corresponding with the 20 moving average. So yes, is it possible to see a little bit of a move up in the GLD? Yeah, but this is going to be a great resistance opportunity, and it may see a sell-off once it hits that 20 moving average or my trend line drawn in. Alright, so keep a close eye on that as we do see a lot of resistance coming into the GLD right around 80, 88 $88.90 and $89 a share, right around that area. All right. That's about all I have for today, folks, as today was just a pause day in the markets. Look for more downside in this market coming up. We still feel that the market has a significant move down coming, although we're not sure how much of a significant move. We'll keep you guys posted as we go, but there should be more downside coming, and we will keep you posted. Have a wonderful day. Come join the chat room. We handle e-minis and questions and anything you can possibly think up having to do with investments in commodities, the U.S. dollar, currencies, stocks. We will handle the questions. We'll answer them to our best ability, and it's a fun room to be in. There's a great group of people now, huge group actually, growing and growing, and you should really come join the elite traders in that room. Other than that, come join the Swing Trade Alerts. Get some great swing trades coming up in this market for the fall, and come join our private consulting. Have a wonderful day, guys. We'll talk to you tomorrow.